Hi, welcome to our March market report. Well, this week the Fed is supposed to start raising interest rates for the first time in a long time. How is that going to affect housing? And most people think we're in a housing bubble. Are we? Well, let's take a look. Hi, here we are in March. Let's take a look at our housing report. No inventory bounce yet. We are just about into springtime. According to the clock, we are into springtime. Daylight savings time started this week, so we should expect to see a bump in inventory starting soon. This is last year's inventory numbers. I just want to show it to illustrate we're in February. Normally March, April, May, June, July, those are the inventory months. That's our hot selling season, if you want to call it, for home sales. Inventory normally peaks in the summertime, July, August, and September. So when we're here next month and we look back at March inventory, we should start seeing an uptick. So that's great news for buyers. Existing home sales is here just to illustrate that a lot of times you hear in the news that we have an inventory shortage. And inventory numbers are at record lows, but that's because homes are selling so fast. We sold more homes last year than we did the year before, So it's not that we don't have enough homes to sell, it's that we have such a high demand of people wanting to buy homes. That's what's putting the inventory into a serious crunch. We're going to look at that in the future about where that demand is coming from, but it's really not an inventory shortage. It really is a very high demand. No price top yet, but we've noticed that prices are starting to stabilize. The appreciation is starting to slow a little bit. If you look at this chart over the last 12 months, you can see for the first 6 months, prices appreciated 19% over that 6-month time frame. Over the last 6 months, prices have only appreciated about 4%. I think this is what we're going to see going forward. I don't think we're going to see the large gains like we had in the last year or two in a short period of time. I don't think we're going to see price drops either, but I think we're going to see stable to slightly higher pricing. This is a year-over-year number from the CoreLogic group, and it's illustrating again last year, year-over-year, how you saw price appreciation accelerate very rapidly. But about the middle of the year, starting in July or August, year-over-year price appreciation began to stabilize, and I think that's where we're going to stay going forward. We are still in a very strong seller's market, no question about it. And if you ask what is a seller's market, let's take a quick look at stats from Madison County and Huntsville. In February, we sold 574 homes in Madison County, and we only have 511 homes on the market. So that means that we have 1 month of inventory on the market in Madison County. Now, a seller's market is any time you have less than 4 months of inventory available. A neutral market is when you have 4 to 6 months of inventory available. And then a buyer's market, which we haven't seen in a very, very long time, is when you have greater than 6 months. So you can see if we have 1 month's worth of inventory available in Madison County, it's going to be a long time before we even get to a neutral market, much less a buyer's market. Even though our inventory is very low, I talk to people making real estate moves every day. And a lot of people think we're in a housing bubble. I just want to do this again. We did it last year, but let's take a look at the last housing crash, which was a very rare event. It's only happened twice in history. But last housing crash about 10 or 12 years ago, let's take a look and see how it compares to today. 77% of the public, according to a recent survey by Realtor.com, think that we're in a housing bubble, and even more interesting than that to me is almost half of realtors believe that we're in a bubble. But let's take a look at the last housing crash that happened back in 2008, 10, 12, in that period. That was a time when the federal government got themselves into the housing business. The government initiated programs because they thought everyone should be a homeowner. So they made it very easy for anybody to get a home loan. Anybody that could sign a paper could have a home loan. You had loans that had no doc loans. You didn't have to provide any documentation on income. You could have stated income loans. Just tell them how much you make, sign the paper, you could get a mortgage. But here's one of the big differences between now and then. Look at the inventory that we had available when that process was going through. We had 9 months, 9 months, 7 months, and 8 months of inventory on hand. So if you have that much inventory on hand or that much supply, and the demand drops at all, you can see that you're going to have a significant drop in prices, and that's exactly what happened. Compare that now to where we are today. Look at the last 4 years of market inventory, 3 months, 1.9, and 1.8. And as we just mentioned, we only have 1 month of inventory in Madison County. So this is significantly different as far as homes on the market that would be available to support any kind of a price crash or price decline. This is another significant difference between now and the crash we had back in 10 and 12. Credit standards now are a lot stricter because, as I mentioned, back in that last crash, anybody could get a mortgage. If you could fog a mirror, you could get a mortgage. As soon as that occurred, they started restricting and improving and strengthening mortgage guidelines and regulations. And as you can see now, people with under 620 credit scores are just a small percentage of the market, where they were a significant percentage of the market in that last crash. In addition to that, now we see more 20% or cash purchases than ever before. So people are buying these homes, most of them going in with equity in their pocket when they make the purchase. Home prices are forecast to continue to appreciate for this year. We look at 7 major companies that forecast home prices. Everyone is forecasting appreciation for 22. The average is about 6%. That's still higher than normal. Normal home price appreciation is about 4% per year. So we're still looking for better than average appreciation this year, but we just do not see a crack or a drop or a crash. Here's what I take from this inventory information. We expect prices to hold steady or continue to rise throughout this year. We expect interest rates to continue to move higher, and we expect the demand to stay very strong. Now, if you're thinking about a real estate move, we need to have a conversation to talk about how these things affect your decisions. If you're a renter, for example, you need to be getting in the housing market because prices are not going to drop, rents are going to increase. If you're a homeowner and wanting to downsize or upsize, there's some strategies that we can use to help you move from one home to the other because it's very difficult to be a buyer right now. 22 should be another strong year for real estate. Don't sit around and wait for a market crash because it's not going to happen this year. If you need a lot of resources, we have links in the description below. We have a link to set up a phone conversation if you want to talk about your next move. Just let us know how we can help. There's a lot of information there that can help you with your next real estate transaction. If we can help in any way, please reach out. Have a great day.